Hi, in this video, we will build a strategy on an MCX instrument called crude oil. So we will mainly use crude oil futures as the instrument, and we will apply some technical indicators on it, and then we will make up a strategy on the same. This strategy will take trades on crude oil options, but our conditions and everything checking will happen on futures. So let's dive into the strategy first, understand what exactly is it, and then we will begin building it on Tradetron. So this strategy is not mine. This has been built by a person called Siddharth Bhanushali, and I have basically borrowed all the concepts from this video. So I'll just minimize the screen, and let's first understand what exactly he's doing. So Siddharth is basically using 5-minute candles. So all the candles that you see out here are basically 5-minute candles. Now on these 5-minute candles, he has added an overlay of this particular instrument, which is basically our SMA. So this SMA is basically this blue line is what you see out here and here. Now this SMA is a 66 moving average. So we are using 66 moving average as shown in this video, and the logic that that we are supposed to follow is that we basically have to look at stochastic as our main technical indicator. So in this strategy, we will use only stochastic K. So that is what he's shown. So stochastic K needs to be used as the technical indicator, and we basically have to look for a cross up or cross down. Now he has given these values called as 75 and 35. So we are basically trying to overlay the stochastic indicator, and we are trying to find a point when this stochastic indicator basically crosses above 35 or it crosses below 75. So these are the 2 points which will determine where exactly we want to have our trigger. So our trigger point is basically on a short, it is when the stochastic falls below 75. So like when it goes above and then it comes below 75 is what we want to look for. And when we find that the stochastic goes below 75, we are basically marking those two candles. So we mark these two candles, and these the candle where the stochastic went below 75 is basically a trigger candle. Now after we have a trigger candle, we are basically waiting for the very next candle to break the low of that particular trigger candle in case of short. But in case of long, we are basically trying to find a stochastic moving above 35. So from below it goes above 35, and then once we find that same thing happening, we are basically finding out that particular candle on which it happened. And if let's say the LTP is it goes above the high of that particular candle in the very next candle, in that case we are taking a long trade. So we have defined a long trade and a short trade. I will link this video in the description so that you can understand this whole strategy very well as he has explained it from here. After we do all of this, so we first check if the moving average is either is it sloping down or is it sloping up. Then we check for our stochastic. After that, we check the candle that is there. Is it Are we breaking the high or low of that trigger candle? If we are breaking the high or low of the trigger candle, in that case we are taking a long or a short trade. Once we take a long or a short trade, we have a stop loss and a target. Now our stop loss is basically in case of a short trade, our stop loss is the high of the of the -1 and -2 candles. So by -1 -2, I basically mean the point where the entry happened before that, the candle before the entry candle, and the one before that particular candle. So let's say if this is the entry candle, this candle and this candle is basically what we would be looking at as our stop loss value. So the stop loss would be the high of those two candles, whichever is the higher amount. In case of a short, that will basically be our stop loss, and in case of a long, whichever is the lower of the two is our stop loss. Now, once we have a stop loss value, so let's say from entry price to stop loss is let's say 50 points. So double of that is our target. So the target, what is defined as a 1:2. So let's say we take an entry, we have a stop loss defined as 50 points. 100 points is when we get 100 points as a target, we will basically close that trade. So this is what is the setup that he has shown in his strategy for crude oil that can be used after 3:30 or from 9:15 up till 11:30 as an intraday strategy. So let's now see how do we build the same strategy on Tradetron. As usual, I have already built this strategy. I will just quickly walk you through all the keywords that I have used on this strategy. So and of course, I will be linking this strategy in the description below so that you can have a look at the strategy and duplicate it for yourself, change the numbers and test it as your like. Um, so first and foremost are our entry conditions. So in our entry conditions, we basically have our entry happening if first important thing, time is greater than 9:15. This is because we want to make sure that first 2-3 candles data has come in. After that, we will basically calculate the values that we need. Now out here, we had seen that he basically the first and most important condition was that we have to see the trend of this particular SMA line. So if it is sloping downwards, in that case, it's a short condition. If it's sloping upwards, then it's a long condition. So for that, we are basically looking at this particular condition. So our position SMA is basically giving us the SMA of the 66 period SMA of the 5-minute candle on crude monthly futures. Now it is very important to note that in our instrument name keyword out here, I am using my instrument as MCX and MCX crude oil, and I'm selecting current month expiry out here. Now by selecting current month expiry, I'm getting the futures value. Do remember that like Nifty, Bank Nifty, we don't have spot value in MCX. So you need to select current month expiry. If you don't, then the strategy will not work as per your logic. In fact, it won't work only. It won't run. It won't take any trades. So I have my SMA keyword and I have another keyword of SMA which is basically on the -2 candle. So I'm basically looking at my -1 candle has to be more than the -2 candle. This is for a long condition. So if my -1 candle is more than my -2 candle, this means that there is an upward sloping that is happening out here. So that is the condition for my SMA. Now after that, the next condition is basically our crossover. So we are basically looking at a stochastic. So in our long condition, as per the strategy he's shown, in our long condition, we have to see a crossover above 35. So the price, the stochastic has to be below 35 and then it has to cross above it. So in order to capture that, what I have used is I have first selected stock K and I've selected a -2 candle. So my -2 candle of my stock K has to be less than 35. So let's say if this is the 35 line, my -2 has to be here, and the -1 that you see out here, this has to be more than 35. So this will basically give us a upward moving line, which we will be able to identify as an upward crossover on the 35 mark. So that is the second condition that we had for our strategy. And the third condition was that the price has to go above the high. So once we found our trigger candle, we basically are not immediately taking an entry. We will take an entry if the price goes above the high of that candle. So we are basically looking at LTP. LTP is greater than the high of the relevant candle. Now I have also added this one piece of code below out here. If you don't understand this code, you can just ignore it. This is just important because it is possible in such a case out here, it is possible that let's say your entry happened at this level and your target was your stop loss, let's say, was around, let's say, 10 points, and after your 10-point stop loss was hit, um, let's say your entry condition was yet true at that point, so it will again take an entry, which is something that I don't want. Or it could also be that it took an entry out here and it hit my target of, let's say, 20 points, and after my 20-point target, it is again possible that the same setup is yet currently true, because the setup will stay true for like 5 minutes. In that case, I don't want to take a re-entry. To avoid my re-entry, I am basically I have built this piece of code. I will add a link in the description to a document on what exactly is this and how do you use it. If you don't understand this, just ignore it. You can just play around with the values that you see on top out here. Now when this setup happens, the three things: SMA, the stochastic, and the LTP above the high, we will basically buy a call option. So I have my position builder, a straightforward position builder, which will buy a call option in crude oil in current month expiry for one lot. After that, I then after taking my trade, I then want to have some variables that will save certain data points. So I will have my runtime variables, and my runtime variables are saving basically three data points. The three data points that it is saving is that it is saving the low value because I'm taking a long trade. So in case of a long trade, I will need the values of these two candles. So like you can see out here, these two candles, the candles that are out here, I need the low value to basically determine my stop loss level. So I am basically using these these two low. So I'm using position low, and I'm selecting -1 for my low of the -1 candle, and I'm selecting -2 for the low of the -2 candle. And I'm also adding a variable called long EP, which will basically save the entry price at which my entry trade happened. So the long trade happened at this price on MCX crude oil futures. So these three data points are being saved. Now, why are these three data points being saved? We'll come to that when we see the exit conditions. So let's go to the exit conditions. And in our exit conditions, basically we have two different conditions based on which we will exit. Now the first condition is that if let's say my stop loss gets hit, so the stop loss out here as per this logic is stop loss below the low. So now I know that I have captured the low using my runtime variables. So I am basically calling these same runtime variables in here. So I am basically having a condition, say LTP is less than the minimum of these two values. Which values? The low number 1 and low number 2. These were the two variables that I had saved in my runtime variables. Second condition for my exit is that I have a double amount of target. So let's say if my stop loss was 20 points, if I get 40 points in target, then I will exit. So in order for that, I have basically built this condition, which is LTP is greater than long entry price. So long entry price was the point at which my entry happened, plus twice the absolute of math operation. Now this is basically finding out the difference. That 20-point number is being calculated using this absolute. So I'm using this absolute to calculate that value. And once I have that value, 20 points, I'm basically multiplying it by number 2. And by multiplying it by number 2, I get my 40 points. And then I'm adding 40 points to my entry price, which I had. So if my LTP on futures goes 40 points above the entry price, which is my target, I will exit the position. So that is the logic that I'm building. Now it is possible that you may think that, let's say 1.5 to 1 is a good risk to reward ratio, or you may think that 5 is to 1 is a good risk to reward ratio. You can change this number to whichever number you think would work best based on your risk to reward expectations. But remember, the higher reward you are looking for, the more is the possibility that your stop loss could get hit. So you want to be at a very nice balance where you are at a place where you are getting good amount of reward. At the same time, you are having less number of stop losses being hit. Um, with that said, I have built my short logic exactly opposite to what I have built for my long logic. If you've understood the long logic, the short should follow suit, and should be fairly straightforward to understand. You can duplicate this strategy from the link in the description, and go through this short logic. And if you have any queries, feel free to drop it in the comment section, or in on support at the rate of Tradetron.tech, and I would be happy to help you. Finally, we have our universal exit conditions, where I have a simple time-based condition. If time is more than 11:30 in the night, I will square off my strategy. Um, and then I have my advanced settings. So my advanced settings will basically make sure that my reactivation will happen again next morning. If you are planning to run this strategy along with your along with your NSE strategies, which means you want this to run only after 3:30 or 4. You will basically want to change this take trades to 6 hours and 30 or 6 hours and 35 minutes. And you will have a condition in entry as time greater than 15:45 or 15:35 and so on. So that is the two changes that you will need to make. Um, since we don't have MCX data on the backtest, I can't show you a backtest, but you can paper trade this and test this on paper trade and see if the strategy works out well for you. So with that said, thank you very much for watching. Have a nice day. Goodbye.